What's going on, traders? Welcome back to the channel. I hope you guys are well. So after yesterday's massive rally and massive comeback in the markets, a historic one to say the least, we find ourselves back in the red with the SPY, the Qs, the SMH, IWM, and the Dow all closing negative. Now in today's video, we're going to discuss a couple of things. We're going to discuss downside support. Should we break the yesterday's low? All right. And we're going to discuss a trade idea that I have in mind that I want to share with you guys to take advantage of that scenario. Okay, so before we dive into the analysis, give this video a thumbs up, subscribe to the channel, and don't forget to hit that bell icon so you'll be notified when I upload the videos. Also, you can join Trending Waves. The link to the Discord group is pinned down in the comment section, guys. So the daily time frame, we have our 200-day period moving average. All right, and in it, we've only tested it once before in 2020, or actually twice, right? And ever since then, we haven't really done that, except for recently where we have actually broken below it, didn't find support, which is really important, right? And we're now hovering underneath it. So the question is, are we going to continue on lower, or are we going to break out of here in a V-shaped recovery? Okay, so in order to do that, let's review our Elliott wave count. All right, let's review our labels. I'm going to turn them on here, and we're going to review price structure out of November the 22nd high. So when we completed our primary degree wave 3, we got our first A wave, 3-wave pullback to the wave B, 1272 to the $428.73 region. We then sold off. Now I understand that this wave C is a bit extended. It's a bit extended to compare with the wave A. We don't have equality. This has reached more than 100% of the extension of wave A, and beyond the 1618. Now that's not an invalidation, right? That's not uncommon either. But it's not ideal. So for that reason, we're going to focus on our higher degree wave structure. All right, we're going to focus to the retracement of the wave 4. So that retracement is between the 23 and the 38.2, 436 and 411. What we have going for ourselves here, ladies and gentlemen, is that we are holding our previous wave support, all right, our previous wave 4 support. So normally when we are within a higher degree wave 4, this wave 4 should always, or normally, gravitates back towards its counterpart, all right, of the lesser degree. So for that reason, this is showing us a good sign, but the price structure that's within here is telling us something different. So let's review and let's take a look at what's going to happen coming into this week. And don't forget that tomorrow we have Powell, pretty important day in the markets. Okay, so I'm going to take you down to the 30-minute time frame, and we're going to review price structure out of the wave B. So that's on January the 4th. Okay, so we got our first wave 1, wave 2 pullback. Now it appears that we have completed a third wave in the minor degree. So we have 1, 2, 3, 4, and 5. Okay, 5 waves completion for this third wave. Now we have what we're looking for here is this wave 4 pullback. Okay, we have a couple of things to look for. So now the question is, did we just make our A wave and we are in the wave B? We are within the wave B. So this is A, B, and C down. Or are we already in the wave C of its higher degree and we're on our way to complete the wave 4? So here is the game plan coming into tomorrow and the rest of the week. All right, I want to see price structure continue to push on higher. Okay, to continue to push on higher as close as possible to this wave 1, because we can't technically, per Elliott wave guidelines, wave 4 can never go beyond the territory of wave 1 unless it's in the diagonal or in the triangle, right, which is an exception. But within an impulsive structure, a motive wave, that can't be the case. Okay, so I want to wait for price structure to go at least to the 50%, maybe the 618, to take a trade opportunity to the downside so that we can hold this low as our stop loss. All right, so keep that in mind, guys. We want to wait for price structure to continue on higher, maybe between 50 and 618, and then use this as our way to mitigate that risk, because then that'll be a very short risk and a large reward to the downside to complete our wave 4. Now, should this play out, okay, that'll be a good trade opportunity. However, it doesn't have to go all that way. That's just my preference. We can start hovering around the 50%, 38.2, 446, 440, and then continue on lower. I wouldn't be a fan of that, but I'm not opposed to it either. So in the event that we continue on higher tomorrow, all right, and then the Fed comes around, completes the 50%, 446, then we head on lower. All right, that's the game plan coming into tomorrow. So downside targets for this, should that play out, are going to be this. I'm going to show you guys. So we're going to take an extension all right, from the low of wave 1 projected to a theoretical completion of the wave 4, okay, and that should give us a wave 5 down towards the 1618, okay. So that's confluence with a 38.2% retracement. Now, this is something that I want you guys to keep on watch, okay. I'm gonna go up, I'm gonna turn on, we're gonna look at our RSI, and this is what we looked for yesterday, what we were discussing in yesterday's video. While we continue on higher in the wave 4, RSI will continue on higher as well. What we want to look for is divergence. All right, that'll be our sign of confirmation that perhaps this is already completed. All right, this wave 5. And what do I mean by that? So what I mean by that is that once we see price structure, or price action rather, start rolling over when it finds its resistance, all right, and then we break yesterday's low, I want to see the RSI also roll over, obviously, but I don't want to see it break below its low. All right, I want to see hold a higher low. That way we get a clear divergence. Okay, we get price structure hit a new low, or price action rather, while we get the relative strength index make a new high, or a higher low, or lower high, sorry, rather. Okay, so those two things we have to keep on watch, because once we see that type of confirmation, it's going to let us know that this wave 5 is almost completed. Okay, so keep your eyes open for that, and keep your eyes open for 446 and 440 for resistance to take us lower. Now, always remember that wave 5s can truncate. Okay, but truncation means that we don't break this low. So for that's the reason why I want to wait a little bit to hit the zone to take opportunity to the downside, because if we just take it right now within this area, then we are stuck between the zone. All right, and there's really no risk to reward there. It's not ideal. Okay, so the Qs, same scenario. Okay, nothing different. So from our December 27th high, we got our A wave, our B wave. Okay, and now we have 1, 2, 3, our fourth. Okay, to the 50%, 38.2. Again, we want to wait for price structure to continue just to go on higher, just slightly, to stay below the wave 1. All right, to use this as our risk or our stop line. We could stop it at or above it just ever so slightly, and then we're going to take advantage for a 5 wave down. Okay, we want to see that occur. Also, just like in the SPY, we want to see divergence in here. So once we see price structure complete or break this low, we want to see this start turning around. Okay, so that we can see clear divergence. All right, guys, I hope that's clear. Same game plan as yesterday, nothing really changed. We are consolidating in the correction at the moment with the lesser degree, and that's it, right? We just have to be a little bit more patient to see what happens tomorrow after the meeting, after the Federal Reserve meeting. Okay, earnings was good for Microsoft. I see that it was that is actually going higher after hours. Let's take a look. MSFT. Where is my chart? Here we go. MSFT. So we see Microsoft going a little bit higher here, and that's pretty good, right? It's boosting up the Nasdaq or the futures market after hours. All right, guys, so that's it for me tonight. Let me know if you guys have any comments. Leave your thoughts and suggestions down in the comment section below. Don't forget to hit the like button and subscribe to the channel and join Trending Waves. All right, see you guys tomorrow. Bye-bye.